Donald Trump's trade war. You could always negotiate new deals, or you could do what Trump does best, and that is make threats and then declare victory at even the slightest change in the status quo. But at what cost? And so we've invited in Tom Kemp. He is the chair of the economics department at UW-Eau Claire. Tom, good to have you here. Thank you very much for joining us this morning.
Oh, thanks. Happy to be here, Pat.
Yeah. So can you do Tariffs 101 for you? No. Well, why not? From the very beginning, what is it that a tariff is supposed to be? Set Donald Trump aside, and
Sure.
what is a tariff as opposed to whatever you would call free trade?
Well, a tariff is just a tax on a good or service as it is imported. So as the good or service enters the country at either airport or seaport or a land crossing, a tax is levied upon that good. Now, the Trump administration has levied a wide array of these tariffs across a large, well, pretty much all our major trading partners. So we're going to see, and we're already seeing, substantial taxes on goods and services as they enter the United States.
So that tax, if you will, doesn't exist in a vacuum in most cases, right? I mean, do other countries, other companies, do they just pay it and say, well, I guess that's the cost of doing business. We'll never see that money again.
Well, it's hard to say, right? We're talking about hundreds of thousands of businesses, likely, perhaps even millions. And they will all make their own decisions on whether they want to, whether it's still profitable for them to operate in U.S. markets as a result of these taxes. It may be the case that some businesses choose to continue to do business with us, albeit at higher pass-through prices, and others may choose to look elsewhere.
So they could pass that cost along, but then there's, along with the pass along to the consumer, there's then the whole notion of retaliatory tariffs. And we talked last week about a new analysis of those retaliatory tariffs. And when that happens, again, what does that do to America's exports, whether you're a Wisconsin soybean farmer or a manufacturer or anything like that? How does that impact business?
Yeah, those retaliatory potential, well, there's some retaliatory tariffs that are in place and others that are being threatened. And those are really perhaps the bigger challenge for the state of Wisconsin. Agricultural exports are significant, a significant part of our economy, as are machine parts and other manufactured goods. So Wisconsin, is a pretty significant manufacturing state, and we send a lot of those manufactured goods around the world. If various retaliatory tariffs continue, escalate, or go into effect, that raises costs for Wisconsin firms that are trying to export their product.
And we get a question from Tony on YouTube, a good one here. Do the companies who have a competitor getting taxed also raise their prices? He writes, I remember hearing domestic companies raise their prices as well and just take the extra profit frequently. So a tariff is, I guess, in a way designed to stimulate, manufacturing in the U.S. to say, here, let's get more of a market for a domestic product. But if somebody's already making a product here, do tariffs give them an incentive to raise their prices as well?
It's difficult to say for any specific firm. Certainly some, right? So the existence of tariffs does give essentially domestic firms license to raise prices. It gives, to a certain degree, right, because competitors are facing higher costs, so their prices are going to go up. So it reduces the level of global competition and therefore, likely raises prices.
And in so doing, again, Tony follows up with how sticky are the prices? I would imagine, and he would as well, prices once a tariff is lifted may not necessarily come down, or at least come down to the pre-tariff level.
Yeah, that's right. It's pretty unlikely that those prices would come back down to the pre-tariff level.
Yeah.
Once they go up, it's harder for them to come down for a variety of reasons.
Right. So have you noticed a lot of activity heading into this? I know, for example, Spectrum had a headline that Wisconsin farmers were pre-selling their crops to prepare for the possibility of tariffs. There was, there were, again, in the manufacturing sector, places were getting whatever orders they could before the tariffs took place. It basically, the bottom line is it's created uncertainty for manufacturers, farmers, consumers, distributors, others, right? I mean, a lot of volatility.
Yeah, that's the real story here, is the uncertainty. Tariffs on, tariffs off, tariffs back on again. This is uncertainty is expensive, right? So if you're trying to do business in this environment, I really feel for anybody who's trying to either export their product from Wisconsin, or if you have supply chains that run through Canada or Mexico or any of the other countries that we're proposing tariffs with. I really feel for you right now, because it's almost impossible to forecast your costs, and as a consequence, impossible to forecast your productivity. And that's just a climate where investment becomes less likely to happen. And of course, less investment means lower productivity in the long term and lower or slower economic growth. So it's really it's self-inflicted harm.
Yeah.
There's no reason we had to have this level of uncertainty.
Let's address a couple of comments online that talk about the trade deficit. One says there's nothing wrong with tariffs in order to balance out the trade deficit. Another says Trump increasing tariffs is brilliant and a great way to decrease our trade deficit. Is that what tariffs do, Tom? Or do they decrease a trade deficit?
Well, perhaps they might do so. That said, it's important to understand what trade deficits are. Trade deficits aren't like that we owe somebody something. If a trade deficit occurs when we buy imported goods. So if you went to the mall last weekend and bought some clothing made in, say, Indonesia, you paid for it, right? You don't owe anything, but a trade deficit was incurred. That's what trade deficits are. They're not like budget deficits where there's somehow some money owed or something like that. So trade deficits simply represent consumer tastes and preferences. I wanted this good, this thing that I bought, clothing made in Indonesia, more than I wanted the US dollars. So to the extent that American consumers have tastes and preferences, that they prefer imported goods, we have trade deficits.
All right. We've got Dale from Wausau on the phone who wants to ask a question about the tariffs themselves. Dale, good morning. Thanks for calling in. What's your question?
Yes, good morning. On the tariffs that are being charged onto products that are imported into this country, I'd like to know where that tariff money that the Trump administration is charging on these imports, where that money goes, to who it goes, or what entity it goes to. I'm hoping that it's not going to end up being, in some circuitous way, a grift where that tariff money goes to Trump, Musk, and Trump's oligarch friends with under the table or backroom deals.
All right, Dale, thank you very much for the call. Appreciate it. So, Tom, again, from a purely textbook standpoint, when a tariff is levied, where's that money supposed to go?
Treasury.
Okay. And then what happens with that? It gets back to that whole notion of we hear all this talk about Elon Musk and others cutting spending, but are you really cutting spending if you're then sending it out a different way as tax cuts for the very wealthy? But that gets a step ahead of the tariffs when they originally come in, right?
Yeah, it's so there's revenue in and expenditure out, and revenue in is pretty clear with tariffs, but expenditure out is a different matter. I guess I would say keep close eye on where the money's going out.
Yeah, exactly. A total case of following the money. We've got another Trump supporter asking online, why do liberals only like tariffs when other countries do it? Which, again, I'm going to take that as a rhetorical question and turn it into something a bit more basic. And that is, make the case for tariffs, because again, this thing is getting criticized, in my opinion, because it's being handled in such a confrontational and ham-handed way that it's easy for people to say, oh, well, you must be against all tariffs. No, that's not the case. Tom, can you make the case when tariffs are proper use by government?
Sure. Well, the classic case for tariffs is military interest, right? Like you don't want all your weaponry made overseas for obvious reasons. Similarly for foodstuffs, again for obvious reasons, and that's why there's sort of more allowances on tariffs in those regards. I would say that the biggest issue here with this current thing is not the tariffs at all. It's the tariffs on, tariffs off, tariffs on, tariffs off. It's the uncertainty that is the big challenge here. If you think about doing business just in your own personal life, you want to do business with somebody who does what they say they're going to do. You don't want to do business with somebody who constantly changes their mind, because it's just a pain, right? It's just a nuisance. And that's personally what I see as the larger challenge here.
Yeah, to me, the most classic example would be China and Wisconsin soybeans. And yeah, it's fine to get them from Wisconsin, but during the last Trump administration, China got a lot of soybeans from Brazil, and that marketplace is still there. And so at what point does that huge market in China go, maybe we just go with the thing that's less volatile? And that's just one of what I imagine, Tom, could be a lot of examples.
Yeah, I mean, I think one of the greatest assets that the United States has as an economy is that historically we generally do what we say we're going to do, more so than almost any other place in the world. I mean, if you think about if you were a business person, which government would you want to do business with? Would you want to do business with the Chinese Communist Party? You want to do business with the Russians? You want to, okay, America. Okay, well, we do what we say we want to do. We do. That's why our economy is so strong.
Yes, our stability was very much an asset pre-Trump. Tom Kemp is the chair of economics at UW-Eau Claire. Tom, it's great to talk to you. Thank you so much for the visit.
Sure, anytime, Pat. Have a
All
good
right.
day.
Thank you. You too.